Good afternoon. This is Tom Alexander. It is Saturday afternoon, February 19th. We have a long weekend. Monday, the cash markets are closed. So we have this long weekend for the market to be on edge regarding geopolitical events, not to mention the overhang of the Fed. It's an interesting time. We are testing the January lows. The situation is really pretty simple, and let me show you what I mean. Okay, what I have done, and by the way, this is the video report that accompanies the written weekend report. If you're not receiving that report and you would like to, the written report, send me an email to at tom@alexandertrading.com, and I'll put you on the list. You'll get the report. Also, you'd be doing me a huge favor if you will subscribe to my YouTube channel. And if you will hit the notification bell, you will get notifications as soon as I post something. And if you like the material, like it. Thank you. End of infomercial. Okay. So what I have done, and this is in the report, I have made line charts of the four primary U.S. trading indices, the cash indices. This is the SPX. The reason I've done this is because a line chart basically connects each day's close, and this is the chart you get as a result of that. It filters out a lot of the noise, and I think it gives a really good view of where we are, and it gives a view of the importance of levels that we are currently approaching in all the indices. If we go much below Friday's low, with each tick, you increase the probabilities of one of these flushes to the downside. Now, if the market turns around here and it takes out this level, I think this was the high of the 15th or the close of the 16th, the close of the 16th at 44.75, and all four of the indices, okay, close above their respective highs. And I put line charts of each of the indices in the report. It's very clear where those levels are. If all four of them were to close above those levels, that would be a potentially very bullish situation. Let's take a look at the NDX. And you can see the NDX is truly on the edge of the abyss as of the close on Friday. This 14,622 level, 23 level, if we close above that, that's the equivalent level to the level in the SPX I just showed. But below here, you open up the door for quite a washout to the downside. Look at the Dow. This is a great view because it highlights the importance of this level in the Dow. So the NDX, the SPX, and the Dow cash indices are all at critical levels. These are inflection points. These are key reference areas. These are levels that have a greater than random probability of creating a very, very sharp move. I don't know if it's going to be up or down, and you really don't have to. As a trader, what you want to do at this point is to go with the market. Now, this is on a position swing trade perspective. This is your drop dead level in my mind. It closed above this level by all four for short trades of any duration. Now you can go down in time frame into the intraday time frame, which we do in the live trade room every day, and you can fine tune this. But the bottom line here is that we are on the cusp of a downside washout of several percent in a very short period of time, or this market is very likely early in the week to just scream higher. So let's take a look at the Russell. And the Russell is in a similar position. Now, ironically, the Russell is showing all of a sudden has decided to show a little bit of relative strength. That said, it also has broken an intermediate to long-term, very, very important level to the downside, and is still comfortably below that level, and that's up here around 2138. This was a balance area that formed, that took almost all of last year to form. This was a false breakout. The market traded through it and then tested the high volume node of the structure and traded sharply lower. Since then, it's been flopping around. Right now, as of Friday's close, it is showing a little bit of relative strength. But if the other indices are going to have some sort of washout, the Russell is not going to trade higher. Okay, let me see what else I want to show you. I'll go to this view real quickly. This is the profile view, and you can go back and look at the past reports over the past several weeks. And I had suggested that rotation and balance in this area might be the order of the day. You know, this is just auction market, typical auction market development on display. A market is only going to be vertical for so long. This market was extremely vertical from the early January high into this low. Then we begin to balance here, and now we've, you know, probed and testing this range, this vertical conviction. Now, what this means, you know, the market, I do think the market's going to break very sharply, and I put the two paths that if we get the sharp break to the downside, what that might look like in terms of market structure. If we get the break and it's to the upside, I put that in the report as well. So you can check that out in the report. Okay, this is the chart that I feature in the report almost every week. And the green arrows are times when NYSE breadth closed negative 2,000 or more extreme in the negative sense. And the most recent one was on the 3rd. But you know, we continue to be really weak, and every time we get some sort of, it looks like some sort of momentum to the upside, it immediately fails. That's a bear market signature. We'll see. We'll see what happens in here. This is why I use the line chart, because all this is noise. The line chart gives, I think, a much better picture of the importance of this area around 4,300 than all these spikes in here. But you can see how many times this level has been tested. Now, another chart that I put in the report this weekend was this chart, and the blue line is average true range, 10-day average true range. The red line is the CBOT volatility index. You can see the VIX has been hanging around and hovering around upper levels really since middle January. And it's hanging in there at these upper levels. It's very stubborn. Also, average true range has been extremely high. Average true range is the highest it has been, with the exception of March 2020, and in quite a while. You typically will find these types of reading near market lows. Now, clearly, there's a lot more room for this to get, both of these to get more extreme than they are at the moment. But they are, especially in case of average true range, 10-day average true range, you know, it's pressing the upper extremes going back several years. And I realize you have to normalize it for the nominal value of the index at that time, but it's still pretty extreme. It's certainly extreme for anything recent. Now, another chart that I wanted to show, let me see if I can find it. I'll do it this way. Where is it? Here we go. Okay. So this is the chart I put in the report. And what I want you to notice the level. We're just above this level in the SPX. And notice how important these levels are. And I could go back a lot longer than this and show how these levels, these previous levels that form these plateaus, are so important. This was back in 2018, heading into, this was like, I think this bottomed on Christmas Eve, if I'm not mistaken. This was a level that formed, and then, you know, this was the March 2020 bottom here, and this was the decline that occurred in that February-March period. You can see you really had acceleration down the second leg of this when it broke this level. And then at that bottom, we began trading higher, and we would form these levels that would get tested, and they'd always break to the upside. They would not go unbroken. And that was an extraordinary run, an extraordinarily bid market, 2 years heading into almost 2 years ago now. And this is the most important level that we've seen, I think, at least since March of 2020. These were relatively minor levels, but they held. But you can see why you want to pay attention around these levels. So we're going to get a sharp move, probably going to get a sharp move. And we'll probably know by Tuesday or Wednesday at the latest. But I would be very surprised if we just sit here for days, 3 or 4 days on end. Guys, I hope you have a wonderful long weekend, and I will be in touch.